Hey guys, how you doing? This is Jay King, self-made millionaire. Look here now. We see the different volatile spread between 27,393, 27,633. So, just for video lesson purposes, let's just play the breakout. I'm going to buy in around 26,646. So I'm going to buy a one contract. Let's see if I can get a little bit lower than this, possibly.
Order rejected. Order rejected.
Let's see if I can get in
Order
here
rejected.
first.
Order rejected.
And if it takes this order, it'll be around 27,644. So what we're doing is, there we go, we got it at 45. So we're playing the breakout. So if you're a trader that plays the breakout, what I would do is I would come down here and I would set maybe a 15-point stop loss. So you can go down here and I would set a stop loss around 27,630. Now, if you're trading on a computer, you would right click. That's how you set a stop loss. You right click. Make sure you right click if you're playing a computer. If you actually are on an iPhone or a Android, you're going to have to come up here and look for a stop. You'll see a stop and a limit. Make sure you have it on stop. That's really important when you're setting stop losses. If you have it on limit, that is to set your actual prices. And so that way you can specify what order you want to enter into, so you can bid. So if you want to bid or sell, it's better than doing market, because market will just kind of buy or sell a contract wherever it wants to put it at, where the system says this is the market price. The market price may be way off from where you're wanting to enter in on the trade. So I always do limit orders, and you can contact customer service if you have questions in regards to the limit orders and how to use the platform, either on computer or use the platform on your iPhone. But what we're doing here is, notice that I'm in at 27,645, and I'm playing the breakout. Now, I'm not really a breakout trader. I primarily like to short commodities once they hit a certain level of resistance. But just for training purposes, if you look right here, we see that that the actual daily spread is 27,630 and 27,663. Now, if you look right here, if you look at this blue tab, it says 27,645. This is where I've entered in on the trade. Now, what I'm doing here is I'm playing the breakout. I'm believing because it's keeping its strengths and it's not gapping down, there's a lot of buyers. Look in here, you see the sellers, but you also see the buyers. Someone right here is wanting to buy 39, 41 contracts. And so all of these bids that are taking place, you can tell that the buyers are much stronger than the sellers. And you can just do that by looking at the numbers. And so the price is starting to go up. And I believe that eventually it's going to break 27,663. Now, if I was trading on a real account, I probably would not make this trade, because, again, like I said, primarily I'm looking to short commodities at resistance. But for those of you that like to play the breakout, or you like to buy at support levels and you feel like this is a strong trade, just enter into the trade and then set your stop losses. You have to determine how many points you're going to set your stop loss for. Remember, I set my stop loss at 27,630. So that's about 15 points below where I've entered in to the contract. So this just simply means that this trade goes against me, since the micro E-mini has a multiplier of 50 cents. That just simply means that the most I can lose on this particular trade would be $7.50, because remember, 15 times 50 cents would be $7.50. So remember, the micro E-mini has a multiplier of 50 cents. So that just simply means when you buy a contract, whether it's 1, 2, 3, 4, 5, or 6 contract, always multiply this times 50 cents. One contract times 50 cents would be 50 cents per tick, which means per point. If you bought 10 contracts, then that would be $5 per point. That would be your point value system. So that's really important to understand. Many of you do understand that, but we're seeing a lot of strength in this particular trade. And what we mean by strength is anytime you see this line right here, it's showing you that this is the daily high, 27,663. And so if this breaks 27,633, it can go all the way up to 28,000, 27,700, 800. We don't know actually where it's going to go if it breaks this particular resistance level. This is why many people play the breakout, especially when it gets right in here. If you have something get right in here, then you may decide to play the breakout. Some people may decide to short it, but I wouldn't short it when it's showing a lot of strength. It's showing a lot of strength, and eventually I think it's going to break 27,663 because of the strengths. Now, I can be wrong. I can be wrong. Remember, a lot of times we're looking at technical analysis charts, and we're looking also at, right now, we can see that this trade is actually, if you look over here, we actually can see that it's all the way up from 27,393. So it's actually gapped up almost 300 points. And so that's a very huge gap, and it's still showing a lot of signs of strength. So anytime a commodity or index is showing a lot of strength, that's because of the buyers. Look at this. There's a lot of buyers and 42 contracts right here, 32 contracts. This is allowing a lot of the support to hold its weight because of the buyers. Now, if the sellers start to come in and sell a lot more contracts, this is going to drop the price eventually. So remember, I've entered in, and we're trying to be patient. I'm trying to be patient just to show you just a trade, whether this trade goes against me or not. I want to show you the power of being able to set stop losses. And there's times when you enter into a commodity or index where when you establish a plan before you trade, always establish a plan. Are you going into this trade to buy or to sell? And why are you buying? And one of the reasons I'm buying is because I see a lot of support. Support means that the index is holding its position and it's not dropping beneath its support level. And the support level right now, we see it between 27,644 and 27,650. It's holding its good position. So that's kind of a sign of a possible double breakout. We already had one breakout this morning. And this has been a very fluctuating commodity. It went all the way down to 27,393. So a lot of the short sellers made money, but it gapped all the way back up. Think if you would have dip bought way down here in this area, you would have had about a 100 to 200 point spread on that trade. So it's really just kind of defining what core strategy you're going to use within this micro e-mini market, because it has a lot of volatility within the market. If you look right here, you can see the volatility from here all the way up to here. And there's going to possibly be a breakdown, but I think it may continue to keep merging up because it tested a lot. Remember a couple of days ago, if we look at this particular chart, if we look at it and we gauge it real closely, remember we saw this particular commodity all the way at 27,700, 800. So it looks like it's trying to work its way back up to the 800 and the 900 range of 27,000. And anytime an index drops significantly from a certain price that it's been at for a week or two, a lot of times you'll see it try to work its way back up. Now look, we're looking here at the particular trade. I want you to look closely, because remember what I'm doing is I'm playing the breakout. I believe that it's going to break past 27,663. But remember, I am not primarily a breakout trader. I primarily short. I play against the stock and I benefit from the decline. So I'm always waiting for the resistance. I'm waiting for something to resist. I'm waiting for it to enter into a level where the sellers begin to break down the price. And, you have to establish, are you going to be a buyer or are you going to be a seller? If you're going to be a buyer, you're going to wait for commodities or stocks to find support. And once they find support, remember, you can be wrong. It may establish another level of support. It may go here, and then later on in the day, it may drop all the way down and establish another level of support. So throughout the day, you may have anywhere from 3 to 5 to 7 different levels of support that it establishes. But that's why it's important when you enter into a stock or an index, if you're going to be a buyer, make sure you set your stop losses. If you set your stop losses, then you're controlling and you're managing your risk. If you're going to be a short seller, you got to determine I'm going to be a short seller. One of the systems that I use is when I enter into a trade, I usually try to short these trades anywhere from 6 to 10 times. And the reason why I do that, and when I say 6 to 10 times, before I implement any other strategy or implement a trade on any other pattern, I try to trade certain patterns that are the same 6 to 10 times. So that means I'm not going to buy. Even if I see an opportunity to dip buy, I'm not going to do that. My first 6 to 10 trades are going to be the patterns that are the most obvious, which I like to wait for breakouts. And I like for them to trend for a little while and then begin to lose their momentum. Once they show signs of a breakdown and it shows signs of a pullback, then I like to short those. And so I try to do that anywhere from maybe 6 to 10 times. And then from there, I may break my rule a little bit and I may decide, let me buy. Let me buy on a dip or let me buy at levels of support, maybe once or twice. But primarily, you're going to have to decide. Some people like to be buyers and shorters, but I think when you're first starting off, it's good to kind of figure out if you're going to be a short seller or if you're going to be a buyer, because this allows you to do something consistently. And when you can do things consistently, when you can do them over and over again, it's more of a benefit, because I think if you buy and you sell and you're trying to figure out so many different strategies, you're not going to be able to discipline yourself to the point to be able to get not so much a guaranteed return, but a consistent return. Because in the market, you can't read and you cannot really predict the market. So it's better to actually decide, this is what I am. I'm a short seller, or I'm a swing trader, or I buy on dip. Some people, they just focus on dip buying. But the reality of it is, because they've established what type of trader they're going to be, then this increases their chances to be successful, because they're allowing themselves to capitalize off of patterns and different trends that they're most familiar with. So today, looks like this trade is going to take a while. What we're doing is, remember now, we dip bought this particular trade, and there's a possibility that this trade may continue to gap down. It may break and gap down, and we may actually see it go down. But like I said, I'm not going to short it right now, because this is a better short. If you decided to short this up in here, I believe this was a better time to short it. And what you do is, if you decided to short in this area of 26,663, 662, you set you a small stop loss right in here. And the reason you set you a small stop loss, I'm going to exit this. The reason you set you a small stop loss up in here is because if it decides to break right in here, right when we get to the daily resistance level, you don't want to put your stop loss. You don't want to put your stop loss way up here. You want to keep your stop loss. Listen very closely. You want to keep your stop loss in this situation when it's getting ready to break out. You want to keep your stop loss right in here, maybe about 1 to 5 points above the actual general level of resistance, because once it breaks 27,663, you don't know where it's going to go. So don't set a stop loss 20 or 30 points above the actual daily resistance. Set it about maybe 2 to 3 points above this, because if it breaks, it may just break right in here, 1 or 2 points, and drop all the way back down. You can also set a 5-point stop loss. But anytime you see this pattern where it's getting ready to break the general high or the resistance of the day, either you can play the breakout. And if you play the breakout, that means you're going to buy right in here and you're going to set your stop loss. I wouldn't set a large stop loss. I would set maybe on like a 5-point to maybe 3 to 5 point stop loss, because remember, it can gap all the way back down or it can go all the way back up once it gets right into this particular daily or general level of resistance. So remember, one of the things that we're identifying when we trade, we're always identifying what the daily support is, which is 27,393. That's the lowest daily level of support. The highest level of resistance is 27,663. But within this, we also have to identify what the daily support is and the daily resistance, because right now we can see around 1151 that this is the daily support. It's holding its position right in here and right in here. And so you have to kind of just watch this, and you may make a decision. You may make a decision to want to enter into this trade. But remember, we're practicing. You can practice buy one contract, sell one contract. If you decide to buy,
Order filled.
look, notice that I bought one contract at 27,647. What I'm going to do is I'm going to set a stop loss right in here. So that way, if it drops beneath this certain price, then it will execute, and it will also help me to manage my risk. Now, notice I set it at 27,640. So what that means is I set it 7 points below my initial entry. So this just simply means 7 times 50 cents would be a $3.50 risk for this trade. So you always have to understand that the micro E-mini has a multiplier of 50 cents. That just simply means based on how many contracts you purchase, you multiply it times 50 cents, and it gives you your tick value. And now when I say tick value, I'm talking about my point value per point. So one contract has a tick value of 50 cents per point. So every time this index fluctuates, for each point, it's going to be a 50 cents fluctuation per point. All right, guys. Well, you guys take it easy. This is J King, Self-Made Millionaire. I wanted to just discuss some things with you that will help you advance within your trading psychology. Take it easy.